So what is going on with the markets right now? Well, it really feels like we're watching a massive tug of war. On one side, you have this incredible, almost explosive optimism around the AI revolution. And on the other side, pulling just as hard, is this deep-seated fear of a global trade war. Where this whole thing settles could really define what happens next for all of us. This brings us to the central question, doesn't it? What's really in the driver's seat? Are we looking at a tech-fueled boom that's just getting started? Or is a trade war bust lurking right around the corner? Let's try and figure out which of these powerful forces is actually winning. Okay, so here's how we're gonna break it all down. First, we'll unpack the mixed signals the market is sending us. Then, we'll dive into that powerful boost coming from the AI sector. After that, we'll look at the geopolitical headwinds, see how this whole conflict is spilling over into other assets, and finally, we'll wrap up with what we should be watching for in the week ahead. All right, let's kick things off by just looking at what the market is telling us at this very moment. Because on the surface, things look pretty good, but you just have to peel back one single layer to see a market with a serious split personality. So if we take a look at the futures, everything's pointing higher. The tech-heavy NASDAQ is leading the charge. This looks like a classic risk-on day, where everyone's feeling optimistic. But hold on a second, look at gold. It's also up, and up by a lot. That's our first major clue that there's something else going on under the hood. And here's the other show. The VIX, which is basically the market's fear gauge, is stuck above 20. Now, for anyone who's not super familiar with it, a VIX reading above 20 signals some real anxiety. It means that even while stocks are inching up, there's this deep sense of unease, a feeling that things could get choppy at any moment. Okay, let's switch gears and talk about the good news, the engine that's really pulling things up, the AI boom. And this isn't just hype or some abstract idea. This optimism is being fueled by some absolutely staggering numbers from one of the most important companies in the entire world. We're talking about TSMC, the Taiwan Semiconductor Manufacturing Company. You know, they're the ones making the powerhouse chips for companies like Apple and NVIDIA. Their latest report wasn't just good, it was a massive statement of belief in this whole AI megatrend. I mean, look at this number. A 39% surge in third quarter profits. For a company this massive, that isn't just a beat, it's a blowout. It's a huge signal that the demand for the hardware that powers AI is very, very real, and it's growing fast. And, you know, this wasn't just a flash in the pan. The company also jacked up its full-year revenue forecast into the mid-30s% range. That's the crucial part. It shows this isn't just about one good quarter, it's about sustained growth for the future. And that kind of confidence sends a massive ripple effect across the entire global tech sector. All right, so that's the bull case. But now we have to look at the other end of the rope, that powerful force pulling in the exact opposite direction. And that, of course, is the cloud of uncertainty hanging over the US-China trade relationship. And this slide, wow, it just perfectly sums up the confusion. On one side, you have President Trump being very blunt, saying, "We're in a trade war now." But then, on the other side, Treasury Secretary Bessent suggests that maybe, just maybe, they could extend the tariff truce. It's these totally conflicting messages from the very top that create this fog of uncertainty that markets absolutely hate. And the clock is ticking on all of this. That 90-day truce is up next month. Now, China holds a pretty big card here with its control over rare earth minerals. Think of these as the secret sauce for all our modern tech. They're essential. So that's some serious leverage. And all this is happening while Beijing is accusing Washington of stirring up unneeded panic. It's a really high-stakes game with no clear endgame in sight. So this push and pull, it's not happening in a vacuum. We're seeing the effects of this tug of war ripple out across currencies, bonds, and even commodities. And you know what? They're all telling the same story of conflict and caution. Okay, let's look at the numbers. We're seeing the dollar a little bit weaker against the euro and a tick up against the yen. But the really interesting story here is in the bond market. That 10-year treasury yield is stubbornly holding above that key 4% mark. That's basically the bond market telling us, hey, we're still worried about inflation and what's coming next, despite all the AI hype. And that brings us right back to gold, doesn't it? The fact that it has hit over 50 record highs this year is just incredible. This is the classic flight to safety move. It tells us that a lot of investors are essentially hedging their bets. They're buying into the AI story with one hand and buying a just-in-case insurance policy with the other. So, with these two gigantic forces pulling against each other, what's the tiebreaker? What could finally give one side the edge? Well, the answer might come from the economic data and the central bank speeches that are lined up for this week. A whole wave of key economic data is about to drop. As we can see from the calendar on investing.com for today, October 16th, we've got jobless claims, which give us a pulse on the labor market. And we've also got retail sales and the producer price index, or PPI, which are all about inflation. This is our next real-time health check on the US economy. And it's not just about the numbers on the page. We really need to listen to what the central bankers are saying. We have a whole lineup of speakers from both the Fed and the European Central Bank. Every single word will be picked apart for clues about inflation and interest rates, and it could easily give one side of this tug-of-war the pull it needs to win. So here we are, stuck in this incredible standoff. You have the AI engine absolutely roaring ahead, while these trade tensions just continue to simmer. The big question is, will the data we get this week finally break the stalemate? Will we finally see a clear winner between the bulls and the bears? It's shaping up to be a week that could set the tone for the rest of the year. Thanks for watching. Don't forget to like and subscribe.